Very good morning to all of you. I welcome you all on this Sunday morning. We have very important topics that we will be discussing today. First of all, let me remind you all to please keep your phones on silent mode for the meeting. I request you all to now please stand up for the national anthem and the institute motto.
Jayesh Shah, Jayesh Shah,
Thank you. Please keep standing for the national anthem.
Be in attention mode. Hands in the side, please.
Thank you all. The first topic for today's session is Section 43B, the amendments that are applicable from assessment year 2024 and 25. So being a very important amendment, very important for us to take care of in our audits, upcoming audits, we have kept the session today. The faculty for the same is CA Jayesh Shah sir, who is also a past convener. For the formal introduction of the speaker, I would like to invite CA Haridas Bhatt, who is also a past convener.
Good morning, everybody. Good morning. So we have got a long session today. To begin with, there is a brief session by Jayesh Shah. We all know Jayesh Shah. He was past convener in the year 2010-11, almost 13 years back. Anyway, Jayesh Shah is a fellow member of ICI with practicing in the auditing and direct tax for the past 34 years. He's a founder partner of CA from JM Associates, which has got office in Mumbai, Kolhapur, and Jaipur. He does the advisory in domestic and international clients for structuring, taxation, and business matters. He presented papers and gave lectures in various forums like Rotary Club, JB CA Circle, WAPI branch, Bhiwandi Circle, etc. And he has been in the committee of WRC, ICA for the last several years. And he contributes to the WRC reference there and our budget booklet and other things. With this brief introduction, I welcome Jayesh Shah for the first session. Before we start, I request Prabhu sir to give a memento to Jayesh Shah. And everybody knows who is Prabhu because whoever living in the cooperative society knows him because he's the authority on the cooperative societies. Yeah. Welcome, sir.
अच्छा
The new amendment in 43B is more important, not only for the audit. If you want to advise your clients for not to get into the disallowances, this is the right time to understand it and right? So welcome Jayesh Shah to give a insight to the amendments.
Yeah.
चालू कर देती हूँ शेयर करके Zoom पे चलो so वहाँ पे लगा।
अच्छा
Good morning, everybody.
morning.
At the outset, I am thankful to convener and team of JB Nagar to giving me this opportunity to share on very important amendment on 43B. As a schedule, we have a very important session on TDS. Various government officials are attending it. But as a practice, they could not start before 10 o'clock. And that is how I have got this opportunity to share this half an hour with you. Nonetheless, this is very important amendment. And before government officials will start on their session, we have in between Prabhu sir's inauguration of book. He has written very important book on presently this amnesty scheme on stamp duty which has come up. So we'll have opportunity for that only. Thank you, Prabhu sir.
Felicitation. Also felicitation on the
Yeah.
And we have a felicitation of newly qualified chartered accountants who has joined to this fraternity. That is also a small function as convener is conveyed. Now coming to my topic, which is allotted to me, amendment on section 43B. 43B allows certain deduction and payment only on the payment basis, as we know. Yeah. Slide नहीं हो रहा. Slide नहीं हो रहा. Yeah. So I've divided my presentation in 4 parts. We'll first overview section 43B as it stands up to March 23. We'll go through the what is the recent amendment which is applicable for March 24. we'll have to overview the MSMED Act because that is the important part of amendment that unless we understand MSMED Act in brief, we'll not able to appreciate the amendment and certain issues which is arising and some case studies. 43B is in the statute since the Finance Act 1983. The amendment was initially came for two type of payments, that is a statutory payment and contribution to the employees welfare fund. Normally, section 28 to, as we know, section 28 to 44 is a computation section for calculating business income from business and profession. For calculation of business and income from business and profession, it is income is calculated as per the method of accounting regularly followed by the assessee. Method of accounting, if it is followed mercantile basis of accounting, the income and expenditure both are accounted on accrual basis. But as accrual basis of accounting, all the payments which are due are accounted as expenditure, and it is used to be allowed as expenses. So legislator thought it appropriate that people are misusing the system. Certain statutory payment and employees welfare funds are debited to P&L account, but not paid for number of years for whatever reason, and they made it necessary and they made it compulsory. Unless it is paid, it will not be allowed as an expenditure for the calculation of income. And time to time, they go on adding the scope of it. The clause C is added, bonus and commission payable to the employees on 31st March is also included as a part of 43B. Any interest on borrowings payable to the public financial institution, to the NBFC, to scheduled bank and cooperative bank are also added. Then clause F includes the leave encashment payable to the employee. And a few years back, they added any sum payable to the railway authority for the use of that railway assets. But proviso used to give the leeway that if it is payment is made before due date of filing of return under 139(1), we get the deduction for the previous year. And that is how a majority of the assessee used to getting the deduction for all these payment if payment is made before due date of filing of return under 139(1). Now coming to the new amendment clause H, which is introduced from current financial year, that is Finance Act 2023. The clause H, which is introduced, includes any sum payable by the assessee to a micro and small enterprises beyond the time limit specified under Section 15 of MSMED Act. Here, the leeway which is given under proviso of that if it is paid under 139(1) is not provided. In that case, the payment due, any payment outstanding as on 31st March to the MSMED enterprise, micro and small enterprise, my apology, micro and small enterprise will be allowable as an expenditure if it is paid within the due date specified under Section 15 of MSMED Act. So in that case, it becomes very important to understand certain the provisions of this provision. We need to understand, if we dissect this provision, there are three conditions we have to understand for disallowance. The first thing is the amount has to be outstanding at the year end. So the question arises if whether amount is due and payable as on 31st March at the year end. That is the first thing that we need to understand. Outstanding due is to the supplier who are classified as a micro and small enterprises under MSMED Act. And thirdly, the outstanding due is beyond the time limit specified under section 15 of MSMED Act. So all the three cumulative conditions are to be satisfied to attract the disallowance. So if outstanding is to medium enterprise, then disallowance doesn't attract. And other than micro or small enterprises, disallowance will not attract. So explanation to the section 4, explanation 4 to the section defines the term micro enterprise and small enterprise. The definition of micro and small enterprises is to be understood as per the MSMED Act. And section 15, the disallowance for section for these section time limit of section 15 is also important. So to understand all that thing, we need to have a brief understanding of MSMED Act. So we'll briefly overview MSMED Act. Micro, Small and Medium Enterprises Act 2006 is very important piece of legislation. The aim is to promote the micro and small industry, providing them ecosystem which helps them to grow, because for our economic growth, the majority business enterprises falls into MSMED. And growth of MSMED will leads to it gives a lot of employment. It leads to a lot of economic growth. So it provides a legal framework to the MSMED enterprise under the Act for the vexatious issue of collection of sum from the buyers, and for the MSME to avail all these benefit, MSMED enterprise has to register under Udyam, popularly called as a Udyam registration. So Udyam registration is a registration based on Aadhaar and Aadhaar link registration is there, and it is a PAN and GSTN based registration. So data are picked up from both the website after initial registration. Year to year data are always picked up from the GSTN and income tax website. The auto system is provided. So we are not required to update the data year to year. The MSME enterprise are divided into two classes, mainly service enterprises and manufacturing enterprises. The criteria as provided as per the 1st July 2020 for the categorization of micro, small and medium enterprises are based on their turnover and based on the plant and machinery investment. And it is a single comprehensive law which eases the challenges of SME. The criteria are provided under section 7 of the MSMED Act for the categorization classification of the micro, small and medium enterprise. Let's go through that categorization. Micro enterprises are one whose turnover is less than 5 crore and plant and machinery is less than 1 crore. Small enterprises are one whose turnover is less than 50 crore and plant and machinery investment is less than 10 crore. And medium enterprises are one whose turnover is between 50 to 250 crore, but less than 250 crore, and plant and machinery investment is less than 50 crore. So both the criteria are to be satisfied. If one of the criteria is missed, then it will fall into subsequent category. For example, if the micro enterprise, the enterprise whose turnover is less than 5 crore, but plant and machinery investment is 10 crore, then automatically it will go to the small enterprise. It will not qualify as a micro enterprise. And for calculation of turnover, export turnover is to be excluded because the government wants to promote the export. So MSME benefit will continue to the entity where if export is there, they continue to be classified under the category which is excluding the export turnover. And plant and machinery investment is to be considered as per the depreciation value as per the Income Tax Act. So previously, we remember that in the past era when SSI registration used to be there instead of MSMED, there used to be a lot of confusion whether a gross block of the plant and machinery to be considered or which value to be considered for the purpose of SSI classification. But now all that issues are now settled, and now depreciation value as per the income tax of plant and machinery is to be seen. That is Section 7 of the MSMED Act. So let's understand the Section 15, which is a governing section for calculation of disallowance for the 43B subsection H. Section 15 creates a liability on the buyer who is buying goods or services from the MSMED enterprises to pay within a stipulated time period. The time period are defined in a two category, where there is an existing agreement between the buyer and seller about the terms of payment. The payment has to come as per the agreed terms of the payment. But if that agreement has to be in writing. But at the same time, by proviso, it puts a restriction that terms of payment cannot exceed the 45 days. So even if agreed terms of payment is say 40 days, that is fine. But if agreed terms of payment is 60 days, then as per the MSMED Act, the terms of payment cannot more than 45 days. Payment has to come in 45 days to the MSMED supplier. Where there is no agreement, the payment has to be given before appointed day. Appointed day as defined under the Act is 15 days from the date of acceptance of the goods. In that case, when there is no agreement between both the party, date of acceptance plays a crucial role. From date of acceptance of goods or services, in 15 days time, on 15 days following the date of acceptance, payment has to be made. So Section 15 creates two dates which we have to keep in mind. If there is an agreement within agreement date, or 45 days, whichever is lesser. If there is no agreement, then 15 days. So that is the date as per Section 15 provides. So for calculation of 43BH, we have to weigh whether the supplier is micro or small enterprise. If it is a micro or small enterprise, whether payment is made within the due date as per Section 15, whether due date, if there is an agreement, as per agreement, if there is no agreement, in 15 days time. So that will help us in calculation. The enterprise as defined is any business concern which is engaged in the production of goods or engaged in the services as per the first schedule of Industrial Development Regulation Act. So first schedule of Industrial Development Regulation Act defines the product which are for which MSMED are eligible for earlier payment. In general, it covers majority of the products. At least hardly any products are left which are not covered by the first schedule. Another important provision is Section 16 of MSMED Act. If payment is not made as per the due date, then the buyer is required to pay the interest to the supplier. The rate of interest provided is 3 times the rate of bank rate notified by the RBI. In that case, as law provides, it is irrespective of the any understanding or agreement between the party, if payment is not made as per the due date of MSMED Act, interest is liable to be paid to the supplier. Section 23 of MSMED Act provides that if at all any interest is payable or paid during the previous year to the supplier, the interest is not allowable for the computation of income under Income Tax Act. So it has an overriding effect over all the acts, and Section 23 specifically prohibits this as a disallowance under Income Tax Act. The circular in 2021, July 21, includes wholesale trade and retail trade also under MSME. They have allowed Udyam registration to the wholesale trader and retail trader. But the circular specifically restricts this benefit only for the purpose of priority sector lending. Because MSME sector is eligible to get the lending from the banks at a concessional rate. And bankers are, as per the RBI norms, MSME industries are considered to be a priority sector, and priority sector has a preferential for the lending. A lot of trading community is deprived of this benefit as they were not considered to be MSMED. So government thought it appropriate that for the purpose of getting the concessional rate of interest for the bank finance, they'll be eligible to get the registration under the Udyam. So they can register under the Udyam and avail the benefit of lower priority sector lending. The NIC code which is given for the registration is code number 45, 46 and 47. So this will enable us to make the distinction whether the party who is registered is a trader or a manufacturer or a service provider. So typically the enterprises who are registered under Udyam, they have two categories, as I told you earlier. There is a manufacturer and service provider. So either the registration, the NIC code allotted to the registration is as a manufacturer or service provider. For the trader, the code allotted is 45, 46 and 47. So other than that, the code are as per the manufacturer and service providers are different codes. I just taken a copy of two registration copy of two different dealers where just to make the things to understand in an appropriate way how it works. If you look at the first registration extract, it is a registration extract of some chartered accountancy firm. So by the way, we chartered accountants also are eligible to register under Udyam, and we are also considered to be a micro or small enterprise based on our turnover and based on the investment in plant and machinery. The NIC code, if you look at on the first is 69. So and 69, and in the last column, activity is a service. So the registration certificate, one can make out that this entity is a entity which is engaged in the activity in service industry, and they are not in 45, 46 or 47 code. And registration certificate itself mentioned the classification micro, small, or I have not taken the copy of total registration. Otherwise, that certificate itself gives the mention of what is the classification of the entity, micro, small, or medium enterprise. The second registration extract is related to the entity which is engaged in two activity. They are engaged into manufacturing of furniture and also engaged in the retail trade. retail trade of garments, and goods and and other articles. So these entity, when to make a distinction for the buyer who is buying from this entity, if the goods are bought as a manufacturer from them, they have to classify that supply under MSMED. If it is for the retail, for the any outstanding is towards retail trade, so that is against the trading activity, because that is under code number 47. Now, after understanding 43BH, as at the cost of repetition, I'll once again repeat the three conditions need to be satisfied for disallowance. First is amount is outstanding as on 31st March, sum payable by the assessee. The outstanding is to the micro and small industry. So that micro and small industry is as per the MSMED registration we have to see. And the outstanding is beyond specified date under section 15 of MSMED Act. We welcome sir for the next session. Rajni sir, I request all of you to welcome him. The other team members are also welcome. Nizamuddin sir. Others are on the way. Yeah. So now coming to the as I was explaining 43B as three conditions we need to satisfy. The sum is payable as on 31st March, and it is payable to the micro and small industry. The payment is outstanding beyond the specified days under section 15 of MSMED Act. If all the three cumulative conditions are satisfied, it attracts the disallowance. We welcome all other team members. Kalpana madam, Prabhat sir. Now coming to what as an auditor we need to report for 43B for reporting under tax audit. Just to recap, when we issue the tax audit report under 44AB, it is in form number 3CA or 3CB, and particulars under 3CD are certified as a true and correct. So when in tax audit report in 3CA, 3CB, we certify that the particulars mentioned in 3CD are true and correct. I need not explain the difference between true and fair and true and correct to this August gathering. So the onus on us when we certify as a 3CD is far higher in degree than when we certify as a true and fair. So keeping in mind, there is two clauses where we need to report related to this. One clause is clause 22, where this clause is on the in the form from last many years. That amount, as we discussed, inadmissible under section 23 of MSME Act, the interest which is paid to MSME are to be reported here, and this automatically goes for the disallowance. The interest calculation is to be checked from their books of account. If assessee has not provided interest in the books of account, whether we need to check if it changes the true and fair view of it, then we need to qualify the report accordingly. And the Institute guidance note on 44AB do provide the guidance how to report on the manner. The other important clause is clause 26, which we are reporting about allowability of expenditure. The clause A will reporting for current year, current March 24 will not be there because there is no pre-existed liability which was disallowed. Uh, for clause B, we'll have to report the expenditure which are incurred and paid within due date will be allowable for March 24. If it is not paid within due date, it will be disallowable. As I'm closing on my time, I'll be a little faster because already team has come. The audit process we need to follow is we need to take from the party the details, the outstanding amount as on 31st March about their classification of outstanding as per the classification micro, small and medium enterprise. And micro and small enterprises payment, particularly manufacturing and service sector details is to be taken separately. With a view that service sector where it is, if it is a trader outstanding, then it doesn't attract 43B disqualification. And we'll have to verify and map the payment date as per the section 15 of MSMED and to work out the disallowance. So, certain important issues is whether this disqualification will attract when income is calculated under presumptive under 44 AD or 44 ADA. Any guess from the just to quicken the issue, 44 AD or 44 ADA being a presumptive section, 43BH will not attract because the section starts with the wording that notwithstanding anything contained under 28 to 43C, so disallowance under in presumptive will not have any impact. Whether auditor in audit process we can accept the confirmation from the client that there is no details are received about the classification of the supplier related to micro, small or medium industry to work out the disallowance. According to me, it will be unfair and it will not be appropriate on the part of the auditor just to rely on the mere confirmation from the auditee that there is no details are received. Nowadays, all the suppliers do mention their Udyam registration number on their invoices itself. So from the invoice, from the Udyam registration number, the Udyam site do provide details of verification of their classification. We can get the details of classification from Udyam website about the party. So just relying on a party's confirmation that no details are received will be inappropriate, and we need to apply appropriate audit process and to work out the disqualification. Whether outstanding dues as on 31st March 23 will have impact, and if it is not paid up to March 24, it will not have an impact because this is a this disallowance is related to the expenditure debited to P&L account for the previous year. So March 23 outstanding is not debited to P&L account for March 24, and accordingly it will not have an impact on calculation. I'll not, as I'm short of time, I'll not go to the case study, but I have created two case studies where this first case study is where supplier, buyer and seller has agreement in writing about terms of payment. So in that case, if you look at the scenario one, if time limit as agreed between both the parties is 10 days, the date of supply is 20th March. In that case, due date will be 30th March as per the case study one, scenario one. So the due date for the payment will be 30th March. And payment is the last column, the payment is made on 26th of March. So as payment is before due date as agreed, it will be allowable for the March 24 account. In a second scenario, payment the due date is The due date is 30th March because the time limit is given is 10 days and actual payment is 31st March. So payment is to be allowed on payment basis. In that scenario also March 24 deduction will be allowable. In a third scenario, payment is made on 4th of April. So in that case, it is not paid as per the due date of section 15, and it is not paid within the previous year. It will not be allowed. So it will attract disallowance under 43BH, and accordingly, it will be allowed in subsequent year 24-25. The subsequent D scenario, if the payment terms agreed is 20 days. The due date will be 9th of April, and payment is before on 4th of April. Payment in that case, deduction will be allowed. Subsequent scenario E, payment is made on 12th of April. It will not be allowed because it is beyond the due date, which is agreed due date is 9th of April. In scenario F, time limit agreed is 60 days between the buyer and seller. So, but as per the Act, it cannot be more than 45 days. The terms of payment cannot be more than 45 days. In that case, we'll have to consider 45 days only for the considering time limit. So 5th of May will be time limit as agreed between the parties on 19th of May. But for the purpose of calculation, we have to consider 5th of May. And actual payment is made on 15th of April. It will be allowed for March 24. But actual payment is made on 15th of May, then it will not be allowed because it is beyond the due date of payment. So I'll not take a time for the subsequent case study as I'm short of time. So to conclude, we can take the question little later as we need to start the second session. So all team members are here, the tax team members are there, and very important session. We are looking forward to that. To conclude, this is a very far-reaching impact on our tax computation of business income for March 24. As still we have a time to advise the client that they need to make sure that the payments are not outstanding, which attracts the disallowance for the year. I conclude my session here. Thank you very much. Yeah, Haridas.
Thank you, Jayesh Bhai. It's an enlightening session, and the final points of 43B explained with the chart and all. Now, as he's explained, it is 45 days. The MSMED overrides the contract. He explained it with the proper chart. Now we are waiting for the next session. So before that, now I get the question answer. You may be having a lot many question answers. That after this tedious session is over, then we can take up the question answer. Till then, I propose a hearty vote of thanks to Jayesh Bhai for nice presentation. Now, before the tedious session, we have got two small events that our convener will explain that.
I would like to invite CA Jayesh Shah sir for the introduction of his book and the unveiling of the new book.
Yeah, please come on the dais. All the dignitaries are requested to come on the dais. Yeah. Thank you, convener and the team, for giving me this opportunity. And I welcome all the dignitaries on the dais. The book, I think you are all aware, on 7th of December 2023, last month, there was a stamp duty amnesty scheme, which is a unique scheme which has never come in any of the tax laws. And under the Stamp Act, new amnesty scheme has been introduced. The unique feature of this amnesty scheme is, if you are applying for any documents which is executed in the year 1980, for first 20 years, that is up to 31st December 2020, up to 1 lakh rupees stamp duty is not there, provided you make an application before 31st of January 2024. That is the scheme. And if, of course, the 100% penalty is also This is the first time where the stamp duty has been waived off. That is a unique feature. And of course, there are 2, 3 slabs. I'm not going to get into detail, but it's an online application and there are a lot of confusion whether housing societies who have not got the conveyance, whether they can do, yes, they can go ahead. And what we have done in this book is, it is divided into 4 parts. The book is published by the taxman, and the first part is the scheme in detail we have explained with the flow chart, checklist, diagrams, and in fact QR code where you want to QR code also has been given where different websites you can visit, YouTube's you can visit, and the articles which is written, news items which has come on the amnesty scheme. This is the first part. Around 7 chapters are there. Second chapter, we have taken second part, we have taken stamp duty and registration, FAQs. Again, the discussion, PPTs, explanation, everything is given about stamp duty and registration. Third part, we have taken up around 15 to 20 circulars which have been issued over the last 2-3 years regarding stamp duty amnesty scheme and also stamp duty provisions. And the last part, we have taken a lot of representation because many people are confused whether it's a agreement registration, whether it's stamp duty. It is nothing but it's a stamp duty payment. As far as registration of agreement is concerned, one party registration was stopped in the year 2011. So we have made a representation that the way deemed conveyance has been allowed, where a DDR can allow the conveyance of land and building to the society when the builders are not giving. And if the builders have not registered an agreement for sale, why not the same registrar permit the registration of an agreement for sale, having paid the stamp duty and having got the society membership, everything. So that representation has been, discussion has been held, and I am hopeful that in the days to come, certainly it will be considered. And let me tell you, if the societies are going for a deemed conveyance, whether it is on the stamp paper or not, whatever it is, you will be able to get the benefit of this scheme. So the stamp duty scheme is one of the best of the ever scheme that I have see. I request you to go through it, and the book is explaining, as I said, every procedure. Any layman can go through that book and do the scheme themselves. And for a chartered accountant, let me tell you, it's a good professional opportunity. It is an online application is there, offline applications are there. By making an application within 7 days, you get either demand notice or exemption notice that it is exempted, and then you can get the document certified either as exempted or pay the nominal amount. So with this, thank you very much, and I request Rajesh sir to unveil the book, and then it is available for the sale at whatever the discount that taxman is offering you. And this is the first time today or yesterday night only you got the book. Yes. Yeah, yes. And it is valid up to 31st March 2024. Just 4 months. Thank you for being an opportunity. Thank you. Thank you, Professor. Books are available outside with the taxman. Yes. Correct? Correct. Thank you.
As we all know that the results for CA final exam were announced just a few days back. We are very happy to announce that many of the children of our members, they have become chartered accountants in these attempts, the past 2 attempts. So we have decided, like we do every year, to felicitate the newly qualified chartered accountants who are the relatives of our already existing members. So I would like to call upon CA Jwala Kairav Trivedi. Please come forward. आप इनके साथ आइए, उनको भी साथ लेके आइए आगे। ज्वाला आगे आइए सर।
रेडी के साथ आइए।
आइए। हाँ, I will call everybody and then we'll give awards together. No?
Please be here.
Next, CA Pratibha Tiwari.
अरे
CA Pratibha Tiwari, please come forward. CA Siddesh Yogesh. CA Jayesh Shah. CA Rajdeep Jain and CA Sashi Panchamira. Please come forward. All 6 of you can come forward together.
Yadav sir, please honor them. Jwala. Go with the parents. Parents के साथ.
Sir, आइए.
दूसरा करना. ये राजदीप क्या है? पिंकी जी सर.
पिंकी जी.
पिंकी जी. मैं भी आ रहा हूँ. ये हीर शाह. Siddesh.
Siddesh.
प्रतिभा तिवारी. सब लोग मिलकर बैठिए. साक्षी पंचमिया. Thank you, newly become CAs and their proud parents. It is good moment for our study circle also that they have got just passed the final examination. So welcome, and all will become our member the moment they will get the membership number. They are most invited to our study circle, and they will become our colleague. Thank you. Yeah.
Okay, coming to our second session for today. Yeah.
Laptop.
Coming to our second session for today. As you can see, we have a host of speakers from the TDS department who are here to enlighten us on the TDS compliance issues that everybody is facing. So the session is being divided into two parts. In the first part, they will take us on a walkthrough through the Traces website and the related provisions and how to deal with it. And the second part is the question answer round that we'll have after the break. So for the introduction of our today's speakers, first of all, I would like to introduce Shri Rajneesh Yadavji, who is the additional CIT TDS 1-2 Mumbai. He's a BTech from IIT Roorkee and he's a 2008 batch IRS officer. Joined the Income Tax Department in 2008 as ACIT. He was sent to field in 2010 and initially posted at Ahmedabad and worked at the Investigation Wing, Business Circle, TDS and Central Circle. Thereafter, Sir is promoted as Joint Commissioner Income Tax, Mumbai and got a promotion transfer to Mumbai. Here, Sir has worked in Business Circle, Faceless, International Taxation, and now is posted as the TDS Range 1-2 Mumbai, and his hobbies include reading, music, and travel. We would like to welcome him with a round of applause. I would like to invite CA Pinky Kaliaji and NM Sir for presenting the memento and a flower bouquet to see Shri Rajneesh Yadav. I would now like to invite CA Mahavir Jain Sir and Amar Bapna ji for presenting memento and flower bouquet to Suresh Kumar ji, ITU. I now invite CA Hemant Gandhi ji and CA Bhavesh Jain Sir for presenting memento and flower bouquet to Ms. Kalpana Shukla, ITU. I now invite CA Manish Jain ji and CA Rahul Raga ji to present some memento and flower bouquet to Nizamuddin Khan sir, who is also ITU. Sir is now going to move into the post of ACIT.
ACIT.
31st December. For the moderation of our today's event, we have with us CA Ashok Mehta ji. I would like to invite CA Krishna Kumar Kedia ji and CA Jayesh Shah for presenting memento and flower bouquet. Okay, sir आप आ जाइए. आप आ जाइए. I would like to invite CA Ramesh Prabhu sir and CA Amar Bafnaji for presenting Memento and Pharmacology, CA Prabhat Pandey. I would like to invite CA Mahesh Bagheria ji and CA Mahavir Jain sir to present Memento and Pharmacology to CA Ravi Sohni ji, who is here on behalf of department to address the queries. I welcome you all to this session today, and now I will hand over the dais to Sir you for taking the session forward. We look forward to a very interactive and fruitful session. So you have to PPT.